How to get whipsawed in the market. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of November 16th, 2020. And I'm showing the CNBC homepage right here, and right now the Dow futures are up 184 points, about 0.63%, and the Dow futures overnight are up about the same percentage. The NASDAQ up just a little bit more. Let me show you a chart here of the Dow. This is the DIA, the ETF for the Dow. It moves exactly with the Dow. And so you can see that, last Monday, of course, you're a trader, everybody knows the market gapped up. The Dow was up over 1,000 points on news both over the weekend that the election had been called for Mr. Biden, and that Pfizer had announced passing a big milestone for the vaccine for the coronavirus. And after that, it just went sideways, down one day, up a little bit, down, up. And it's, so for the 4 trading sessions after Monday, the market has gone completely sideways. And I started by saying how to get whipsawed in the market. And what whipsaw means in trading is, there's breaking news, the market goes up, you go long, and then it turns and it goes short and you get stopped out. So you go short and then it turns back up and you get stopped out again, and you're just on the wrong side, right? You're chasing kind of knee-jerk moves, and you're always on the wrong side of it. And so you go long, you get stopped, you go short, you get stopped, and you just keep losing money on trades. And so the way to continue that, if you want to continue losing money, is to chase very short-term headlines in the market. Now, I don't suggest doing that. That's a losing strategy. And, successful trading means you go with the trend. Well, if we look here at the Dow Jones daily chart, what is the trend? Well, trends are measured by, like here, this was a trend, right? And you can, it's just, Dow theory tells us trends are higher, uptrend is higher highs, higher lows, higher highs, higher lows. And so if we can, just kind of trace this was an uptrend through, the spring and summer, right? Market was up, higher highs, higher lows, higher highs, higher lows. That's an uptrend, right? And then we had a bit of a turn. We had a couple, a low and then a lower low. So that was a little bit of a downtrend. What's it doing right now? So it's put in a high, but it has not, really done anything else. So we're not in a short-term trend. There was an uptrend. There was a beginning of a downtrend. Now, when it put in all-time highs, and now it's going sideways. So there is not a trend to trade. So if you would like to get whipsawed, try to anticipate a trend and jump on it, and you're likely to get whipsawed and to get stopped out. So I don't suggest that. The real action right now is short-term in day trading. There are, pretty good intraday moves, but in terms of trend trading, as I said, there is not a current trend to trade. And so to lose money, try to anticipate it, and you might get right, and you might get in early, and the trend takes off, up or down. But you could be wrong, and just trying to chase headlines, trying to chase moves and imply bigger moves from them without enough evidence. It's the recipe for getting whipsawed and ultimately losing money. So you got to be patient, you got to be disciplined, and let longer term trends actually develop. Now the market, the Dow here and the S&P, here the Dow put in all-time highs and then went sideways. Let's look at the S&P. It did pretty much the same thing. Put in an all-time high and then pulled back and went sideways. It's overnight futures are up. That doesn't tell us that it's going to continue. Interestingly, the NASDAQ, there's all kinds of talk about rotation. There was an all-time high, so it did not break the all-time high, and then it pulled back pretty sharply, and there's the idea that money's coming out of technology and into, other stuff. The COVID darlings, Zoom and the rest, got kind of punished, and more basic stuff was moving up. Let's look here at the Russell. It did put in an all-time high, and then just like the Dow and the S&P went totally sideways. So I think the action is in short term, even day trading. I'm not a day trader, but I think that's where it's at. If you're a trend trader and you want to trade longer term, being on the sidelines not a bad place to be. Can you miss a little if the trend starts? Yeah, you can, but you certainly won't get whipsawed. So I'm adjusting my trading. I'm moving down to shorter time frames and looking for opportunities, and also looking for stocks. And there are some that are not moving with the indexes, and they got their own thing going on. I'll give you an example here. I kind of like Papa John's as a long trade. It was down Friday, but it's not really reacting to the headlines, and there's a clear evidence of a new uptrend, a high, higher, low, new high. It's pulled back a little bit, and maybe an opportunity, and this thing looks like it could go according to all my analysis techniques, and I might be trading that. And there's other trades like that. So to be successful, I think you got to find instruments that are not responding to the short-term headlines and that do have real trends, and to not get sucked into short-term moves and kind of euphoria and then pessimism with breaking news. So I hope that all makes sense. And once things settle, and there could be an established trend in the indexes and the instruments that follow the indexes, and some good trading opportunities. But for now, I think shorter term time frames are where the action and the success is going to be at. And this could go on for a while. It looks like Mr. Biden's going to be, going to get the electoral votes. He's going to be certified. The electors are going to do their thing in December, and then we got to wait till January for Georgia runoff to see what the Senate balance is going to be. So we could be in for some sideways, kind of volatility, up and down, up and down, up and down, and for a couple months. So don't get sucked in, don't get whipsawed, and be disciplined, and be willing, if you're not interested in short-term trading, be willing to wait, right? There'll be opportunities. And if you do like short-term trading, then there's some opportunities. Just always use risk control, risk management. Understand that every trade can lose. Make sure that the amount you lose on each trade, if it turns against you, is an acceptable amount. Well, that's it. And my mantra is always keep the winners big, losers small, and have fun in trading, and just be disciplined. Don't react to a headline and assume that just changed the world. It didn't. All right, that's it for this week. Thanks. Bye.